Hey everybody, how's it going? Infinity, Larry, Sergio, Valerie, Dan, Goose, Roslyn, morning, and welcome to the show. We start every day at the same time, Roslyn. 9:15 is my goal, plus or minus a couple minutes. Sometimes I don't get my crap together. This morning, I wasn't sure I was gonna make it on time. We had a little power outage last night, apparently during the storms, and everything reset, which is never my favorite. Never ever, because I don't know if anybody has worked with a bunch of computers and you like, I mean, I've got a bunch, like not just a few. Like any given day, I probably work. Gosh, my desk, I think I have 8 screens looking at me when I'm sitting there. Um, my main trading desk. This right here, I've got 3 screens, 4 screens looking at me right now, and I've got a nice chunk of computers that run to make all this work. I keep up with everything. I got alerts, I got bots, I got all these things. The power goes out, takes down half of the stuff. It just takes forever to get everything back up and synced and loaded and this and that and the other. There's no automated anything for getting it all back up, and it's just a big pain in the butt. I don't even reboot my laptop unless I have to for Windows updates. It's just that much pain in the butt. I tell you. So I dislike it when the power goes out, and it, like other things happen. It resets the focus on the camera, and this particular camera I'm using right here is not the new one I bought. It's still the old one that does not autofocus very well at all. So it's a manual process, and we keep it manual so it doesn't all that, like when I stick my hand up, it doesn't all of a sudden focus there and then I'm out of focus. It loves to do that, and apparently, despite my phone being on silent, I'm gonna have to put it on completely mute. Anyway, there we go. So, got a down day yesterday, right? And it wasn't too bad, I guess. I mean, we ended up actually being up for the day on, as far as open to close, it turned into a green candle on the S&P 500. You look at this right here, a little bitty green doji on the daily. Hammer or whatever you want to call it, spinning top, I don't know. Inverted croquet with a twist, with a double backflip, I don't know. I don't really care about the candle names. It's kind of a doji thing, if you ask me. And right there, I don't own the building, so it's not, can't really do much about it. So, what do we got overnight? Well, futures giving it back just a little bit, diving down in the lower time frames. Let's see what we got cooking. Why do I use futures? Well, it tells more story here. So the story is we moved up off the low. We hit that low basically right on the nose. I was talking about this yesterday during 30 minutes of awesome after the close. When we go back to this chart right here, we go off this low up to this high. We tapped right here. And at this point, we retraced to the 100. Are we going to push down to this lower level? We might. We did this move right here. We retrace back, arrow. Retrace back up, held. Now, are we going for that? Maybe. It's the same pattern I look for all the time. Same pattern. So, maybe we're going for that. If we get through that, it could be a bigger down. So these are the small time frame things you got to watch, got to keep an eye on. Right now, still thinking we could go higher because that was just one move up. That was one retrace, holding higher low so far. I'm just saying this is possible if it's doing the pattern. I don't think we're necessarily that bearish at the moment. It's not feeling it. Got this feeling in the market, and we're still bleeding off bullish here. Still gives us probability, but it's not high probability to go higher until we're up above this. So we've come down pretty good. could get one more marginal lower low versus that upside target. So there you go. John, you don't have to tell us your name. Your name shows up. So anyway, if you didn't know, your name shows up on YouTube automatically. And if you want to be you want to chat with everybody like John and Keith and Infinity, just click the subscribe button over there on the other side. The little green button has my little logo on it. Click the subscribe button, be a subscriber on the channel. A few seconds later, you can chat while I am live. Hey Zoob, we're working on getting the morning monster market. We're going to give you a surprise. You're going to be one of the first to get one of the morning monster mega mugs as your prize. Now, like I said, you'll get a prize. It's something you can't buy, something you can't get anywhere else. We're going to give that away as the prize. So yeah, you're going to get the first one hot off the presses. Once we have a few things we have to finish up. Kimberly and I have been working on this for a few months now, and you're going to be one of the first ones. So not ready yet, though. Not yet. It's coming. I just want to throw that out there. So, all right. Dun, dun, dun. So we have potential for a little further downside. Potential to go up to resistance. So in between, it's like the gray zone. All right. In between here, it's like a gray zone. No high probability anything in between here. Okay? It's just not. Nothing's clear, nothing's worked up, nothing, just nothing at this point. So what do I expect today? Well, we'll get to my expectation for the day near the end, but there's not even much on the list. Like nothing's even moving. It's just such a boring week this week. As far as economic news wise, and all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation intended to be informational, educational, fun, and entertaining. It's not a recommendation to buy or sell anything. No stocks, no options, no bonds, no forex, no futures, no cryptos, no treasuries. Don't long them, don't short them, don't trade them. If you desire personal financial advice, that's not what I do. I'm not giving you personal advice, except to be careful with your freaking money. You need to consult a financial advisor that you hire and trust. All right. Now, the economic calendar, pretty benign here this week. I mean, we get some unemployment tomorrow. We get that every week. We get the monthly unemployment rate in non-farm employment, whatever, blah, 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 all manufactured. We look at since COVID, actually all the way back to before COVID, we have not added a single job for native-born citizens of the United States. All the jobs added are all people coming in from other places. Essentially, if you break it down to native U.S. citizens, people born here, and run it across, we have actually lost jobs for native-born U.S. citizens, despite growing jobs at the highest employment, whatever, blah 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 blah. So it's all manufactured, all full of malarkey. We'll see what actually happens later on Friday. I mean, so we got 2 days to wait to see what the next Comedy Central release is on that one. And next week, we actually start getting some earnings. Banks, financials, kicking it off next week. So maybe we can get some more moves. I don't know. Not too optimistic for a couple weeks, probably, till we really ramp it up. It's probably going to be, where'd that calendar go? It's probably going to be this week where we really start moving on some earnings. Most of the financials not going to report till probably the 8th, I think it is. So gold and oil being really strong. Gold, I mean, look at this baby. Get a little retrace overnight, but this has been strong. Feeling strong, my friend. We have that 2300 resistance has been pretty good. I said we'd probably find some resistance at 2300. We're going to find resistance at probably every big whole hundreds of dollars on gold moving higher. But we probably are going to go, I mean, we're set. We consolidated for years. And we're set to go on a big extension higher. I mean, this was a multi-year consolidation. You look at it over here. We've been working on this breakout since all the way back here, 2011. When I talk about this is like a years long in the making breakout, I'm talking 13 years long. All right. How much? This is why I'm very cautious about trying to put a cap on, these are short-term targets. The big potential here, I mean, this has a huge upside potential. And we're not even, none of these fib lines even taken into, we're talking about an extension, something like this. We're talking about levels up here. Yeah, that's 8,000. Yeah, that's 14,000. Yeah, that's 29,000. So when I've been talking about that $25,000 price potential, it's not out of the realm of potential if we were to echo that move right there. All we're doing, echoing that move. And we're likely to get extensions, because that's the way this goes. After you consolidate for 13 years, you get extensions. Extensions put us up here, this $25,000 price. All right. Now, how long is that going to take? Well, a while. All right. We're not talking this year. We're not even talking next year. We're not even talking the year after. Look, that was almost 10 years. Well, that was 11 years. 11 years. So we're talking from the breakout, it could be 11 more years. This is part of the correction until we break out. Now that we're breaking out, we could be talking 11 years, 12 years. Could be 3 times that long. Could be 30 years we go on a run. All right. So this could take a while. All right. Just throwing it out there. I don't pay attention to any HK50. It's not something I keep an eye on. Not been on my radar. I can't answer that question. Now, black gold. It's got this crazy negative spike down here, which messes up all the charts. So we have to zoom her up where we don't have that on the chart. But this has a nice, huge potential upside also. I talked about it. I've got a lot of crap drawn on this chart. But the real potential off of this pullback that we had, so we topped out, after COVID, we ramped up, went all the way up from negative 40 back to $130 a barrel, and then we did a correction. And if I jump over to this chart and make it where we can clear this up a little bit, I don't have as much stuff drawn on the chart. Look, this was a years-long correction, and we're still in it. You see this high from back here? Anybody remember that? 08? I remember. It's like you were carrying cash to the gas station trying to get cheaper prices. Look at that correction. 1, 2, 3. Correction right there. 1, 2. Right down to the 1272. Negative 32. Isn't that funny? That correction, that sets us up for an extension. That extension, look at this. 199. 264. If we're going to break out bullish, and the breakout levels up here to 150, just our little micro breakout, we're looking at going up to 100. Then we're going to come up here, potentially test this 150 price area where we topped out before. Get through that. We could be heading to 200. All right. Option plays, it depends on how you want to play on oil. This, we're talking about, look how long this correction took. We haven't even broke out yet. This is it didn't even finish. This is a 20. Is this like a 20-year correction? 15-year? I mean, just from here down to here is 12. 13, 14, 15, 16. I mean, how long is our correction? Right, we're getting close. We're getting close to, well, it's 16 years now. And we could break out this year. Could be next year. Could be the year after. How long can you stay solvent in options? Like, Nikhil, I mean, you want to think, what's an options play? How long is it going to take? That's a good question. All right. Now, how am I actually taking advantage of this micro potential to go to 105? With UCO. Is this leveraged? Yeah, it's leveraged. Does it cut both ways? Absolutely. And if we flip back over here, you can actually see, I put out this, what, in February? Anybody remember? Zoom it back up. Got a bunch of stuff drawn on here, written on here. It's 34.50. I wasn't even looking to go long until, and there we are right there. Go, stop sending me messages. 34.50. So we're right there at it. Conservative target 37, target 39, more aggressive target 42. God bless, man. Goose, stop. Seriously, dude. And bigger picture, 48. So, there you go. That's oil, black gold, and gold, both with a mega. I mean, we're not even talking like super cycle situation. We're talking like just big bullish upward potential. Now, at the same time, we could see, you know, these are the kind of numbers that could be hyperinflation for the United States. We could lose our status as the reserve currency. All right. This is the warning that I'm throwing out there, is that, you know, we've all heard this. We've all seen the stories for years. But at this point, we have entered into, and I know this is like twitchy for some people, we've entered into a point where the assets per citizen, 559,000, and the debt per citizen, 663,000. And we've tipped the scales where this isn't coming back. We're spiraling out of control here. Like, this is ramping up. This is getting worse. We're spending, you know, we're adding $1 trillion of this every 100 days, this national debt. It's getting worse faster. So this is a major problem. And it could cause the value of everything priced in dollars to explode. Absolutely explode higher. So I'm just throwing that out there. Like, when you price everything in dollars and the thing you're measuring with, dollars, goes in the toilet, everything explodes higher. It's kind of difficult to wrap your head around for, like, the people we have trusted to manage the dollars have not done their job. And now we've gotten to the point where it's probably not recoverable. How long does it take to unwind? Could be the rest of my life. I don't know. But it's getting worse at a faster rate than we've ever seen before. And it's probably not recoverable without extreme inflation. It's the only way we can control this debt. We saw that in the 70s. That's how they did it. That's how it was managed. It's brought back under control with extreme inflation. So we're talking about, that's the solution. That's the only solution. So when they're talking about rate cuts and stuff like that, it's comical. They're going to have to bump rates more. It's the only way that I see out of this mess. So we're climbing. The DG Delta Golf Sierra 2 DGS2, 2-year Treasury constant maturity rate. That's the blue line. We're climbing. Once we climb back over the orange line, they're going to raise rates again. You want to go with probabilities of whatever the yakety schmackety. This is reality right here. If the blue line goes back over the orange, they're going to raise rates again. Period. Period. All right? Nobody's talking about the rate raises that are coming, except this guy. We're going to raise rates again. I'm willing to bet you. At this point, it's coming. How long? Well, I mean, we kind of project this out just a little bit, and what the devil? There we go. Project this out just a little bit. Project there sideways just a little bit more. August? Could be August when we cross. Hey, my intern Will saying good morning, everybody. So right here, if we stay on this rate, if we ramp this up, we could see rate raises August, September, right into the election. Wouldn't that be crazy? I don't think they cut at all. If they cut, it'll be temporary, and then they'll raise again as the DGS2 crosses over the Fed funds rate. If you want to recreate this, just type in into TradingView right here, tradingview.com. Open it up, make your little, you can make a free account. You don't even have to pay for this. All right. You can do this all with a free account. TradingView.com, open your account, get to the charts. This is called Super Charts, I think it is. Let's see. Stock heat map, products. Yeah, Super Charts right here. Once you open this up and you got your thing, click on Super Charts. Once you're in here, you just type DGS2 right there in the symbol search. You can just type it right on the chart. Pops it up, 2-year constant maturity rate right there. Once you've got this chart up, you click this button right here, compare or add symbol. You type FUNDS right there. It's from the government. It's not even not anybody's made up numbers. It's the government's numbers. Puts the orange line on your chart. You can color it whatever you want to. Make it whatever color you want. You can make the DGS2 any color you want. That's up there. And then you have the chart. Now, these orange boxes I drew on here are the target rate. We just keep holding that target rate. If DGS2 crosses back above, we're going higher. All the way back here, and a year ago, February, well, now it's like 14 months ago, in February last year, I speculated that we'd probably go sideways for a while and then ramp rates again until we got to the actual financial crisis. Right up here. Somewhere. Could be 25, could be 26. So there you go. I think that's likely. We're probably going on up to 8-9%. All those people buying mortgages and counting on cheaper rates in the future. They're about to get a rude awakening as rates go up higher. Probably blamed on whatever new president we have. This is the only solution. The writing's already on the wall. All right? Be careful out there. When they cut rates, remember, when they cut rates, look at every time we've cut rates in the last 30 years. Financial crisis, financial crisis, financial crisis. Every one of these. .com bust, housing bust, rates freak out, followed by COVID. That was all part of the same freak out right there. We got an intermediary all clear and then took a bath on COVID. Zero interest rate policy has been horrible for a lot of people. They don't know how to operate in a raising rates environment. We're in a high rate environment. I mean, heck, if you look at this thing on the big scale, and this one doesn't go back further than 1977, if you go back on the biggest scale that we possibly could, the resting rate of interest rates in this country has been about between 8 and 9%. We've been down here way underperforming for 30 years. So there you go. There's my JT rant of the day, I guess you might say. So welcome everybody. Remember, if I say anything you like or is informative, something new you learned today, make sure that you give me a thumbs up, a like on the video, interact, maybe share with a friend that might find this information valuable and informative. So let's actually talk about what's moving today, what we can actually make money with. So anyway, ES getting a little retrace off the pop yesterday. Let's zoom her back up and see where we're at. So we do have that potential to go on further down. That support, that next level of support right here. If we break below here, we're probably going on down here. Well, it's, we could find support at that low from yesterday. If we get below it, that's the next support right below us. We're actually hanging right around the monthly pivot, I believe it is, on ES. S&P basically opening kind of flat right there. Seeing a little rally. We open lower, coming back flat, down 1. I mean, that's essentially flat. In Q, this one was more interesting on this correction. While ES was doing setting up more bullishness, NQ potentially being more bearish, and right now, I think it's interesting. This rally we did from here to here, we tagged the 1618. That would be kind of a normal bottoming place. Now, we had this move down, this retrace, and this move down, and we tagged the 1272. This is like an echo of this move down right here. Pulled over right there. We hit the 100%, went to a 1272. We could make it all the way down to this 18100. Go test that. If at some point here, we're going to need a bigger retrace if we're going to continue down, a bigger retrace that holds a 618 level. Now, at this point, if we rallied up here today or over the next couple days, if we rallied right up here, held that, turned back down again, I would be very concerned we could be set up for a crash situation, like a larger down. We're talking 5% fleecing. It could go quickly. So these are some things I'm keenly aware of and watching right now. Russell had a big down yesterday, right down to basically the lows we've seen in the last couple months. And the lows that we've had, the trend line of the lows we've had this year is on down here around 2045-ish, 2040. We start getting below that, we're tilting. The odds bearish, but remember, trend lines and trend channels are the weakest of the technical patterns. So we're holding that trend of lows. That's kind of like a higher channel than these down here that we started out the year with. So we've got that. We've got that. If we start getting below that, we're probably coming down here, right around this 1950 area. And then if we break below that, that's the indication we're going probably on down, probably eventually going to end up in the 1400 to 1300 to 1400 area down here. This move up has kind of set this up. We could see a substantial move down, but that doesn't mean we're not going to make a higher high first. If we hold all this support, we could poke up and make another higher high on Russell. And it's not anywhere near the highs we've had. We're still in this giant correction, and that's why I think we've got lower to go. This was the first move down. This has been a corrective move up, holding the 618 zone so far. Bigger pattern, just like everything else. We've moved down, we've moved up, held that 618. sets us up for this bigger correction down here. Bitcoin, trying its darndest, man. Trying its darndest. Zoom back up. Didn't do this. Dun, 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 dun. I may have to go to the other chart, a little cleaner. So we have moved down. Same situation. We moved back up. We broke above the 618 though. This tipped it 70% odds that we're going up here. 77,000. Now, what did we do the last 2 days, 3 days? We retraced, held the 618 so far. These patterns, they nest up, all right? They're fractal in nature. It gets confusing. That's why you're here watching somebody that can sit here and digest this stuff and keep up with it. All the different levels, all the different charts. I guess I'm an idiot savant, all right? We've moved up. We retraced, held this level. If we can break it back above, and we have to run a third level. So this is the first level we broke above. The second level we've retraced to and held support. The third level that tells us where we might watch out. This high to this low. We've got to break above this $69,000 area right here on Bitcoin to indicate we're actually continuing higher. Until then, we're kind of in that gray zone, that no man's zone right there I was talking about, like on ES, like on S&P 500. Kind of like in this gray zone. Now we've got lower levels to go. If we lower levels of support to go all the way down to this prior low area right over here. As long as we're staying above that, we're still set up to go bullish. We're holding the bullish pattern intact. Until we break out, we don't have the confirmation we're going higher. We're just sitting here, just churning. All right. Sit tight. Nothing's been decided yet. I'm sitting tight in all my Bitcoin positions right now. We do have the halving event coming up. That's a major thing. About 2,450 blocks left to go. About 16 days, which puts us on the 19th. Still on track for the 19th. I told you, as we get closer, we're going to firm this up. It's firming up to the 19th. Holding pretty firm. And if you want to see the blocks as they get mined, right here, mempool.space, we're running ahead, 21 blocks ahead of schedule, roughly averaging 9.8 minutes per block. It's been 15 minutes since the last block was mined. And in about 7 days, we're going to readjust the difficulty, make it harder. Well, it'll be harder at this point unless we start lagging behind for some reason. So there you go. Transactions running a little light compared to normal. Usually we have 3,000, 3,000, 3,000. Running a little light on Bitcoin transactions. Interesting. I always think it's interesting to watch the blocks. So the halving event coming up, what does that do? Cut supply. All right, right now we're 900-ish Bitcoins per day hitting the market, being mined out. After halving in that block, that 840,000th block, all of a sudden we're going to flip down to about 450 Bitcoins getting mined out per month. That's a big change. I mean, what is it going to do? Nothing immediately. Usually takes 220 to 240 days for the market to digest that reduced supply, and then the effects really take off. Ethereum, however, is more bearish at the moment. This held the 618 retrace. It did not break above that resistance. Did not indicate we're going higher. And when we look at this right here, we're pushing below the 618 here. Ethereum setting up more bearish. Now, this may put negative pressure on Bitcoin. This could indicate that we're about to see that decision from the SEC that classifies Ethereum as a security instead of a commodity. Do we get a knee-jerk reaction, a big spike down? It's kind of weird. Right, Sledge, if you're here, Goose, I know we talked about this for Boeing. Like, Is it the chart that makes the news, or is it the news that makes the chart? It could be, people are going to say it's, this dropped because the SEC classified Ethereum as a security, but it's already in the chart that we may do a big drop, and we may do a substantial drop all the way down to like 400. It's already in the chart. Isn't that crazy? I think it's crazy. It's wild to me once I started being able to do this. So watch out for a retrace down to this zone. That zone right there. Why is that oval there? Because it's the daily roadmap line. We get below that, we could take a bigger down trajectory, take us down to 1,000, possibly even down to 400 or 500. The dollar set to, 70% odds we're going to pop this 105 area. Doesn't mean we won't retrace back down to the roadmap line first. It's just 70% odds we're going to do that. Leaves 30% though that we just fail and crush it at this point. We've kind of double topped right now. It shows a significant resistance right at that 105 area. This is only like 105.50, 105.60. So we're only talking 60 cents more on the dollar index. And we'll see what happens there. All right. We'll see what happens there. And I don't think this was the current list. Let's see. I don't think I put cold on the list this morning. I guess I did. So cold natural gas short, popping a little bit, but that just means natural gas is going in the toilet. What? Rallying a little bit today. So we're just in this churn zone. Looks a lot like what we did over here, just on a smaller scale. If you look at this pattern right here, right there, kind of make it smaller and project it right over here. That's exactly what we're doing again. So we may see a rally up into the roadmap line sometime in summer, late summer into October. So this thing may just churn and be kind of lame and, slowly churn up here into the summer. And then we get another retrace. The market repeats. It's not always the exact same story. It's the same. We see the same patterns. They're not perfectly copies. They're different proportions, different sizes, all those things. We see the same things playing out over and over and over on different scales and different sizes and all those things. So watch this same pattern to play out again right there on natural gas. And that, I don't see cold going anywhere huge in, as long as natural gas is just kind of being lame, for lack of a better term. That is not even worth talking about. And look, this, like dead, heartbeat, there's nothing to even talk about here. Play, nice pop, Dave & Buster's. Never been to a Dave & Buster's. Don't have one here. Looks like finally a breakout, but long term, got to go up to the weekly chart. Long term, we've got resistance right there that we're right into. Color that back orange. Now, if we're going to go on a breakout, yeah, it went all the way down to 5. Holy guacamole. That's, in fact, IPOs usually make a lower low. That high, that low. Could set us up for a run to 154. So that could be almost a little better than a double on shares. Not too shabby. And it could take us out to 400. I'd watch that one for a breakout. I'm actually going to set an alert there. Start breaking out. I'll probably buy a few shares just to see if I can double it. LENZ. Wow. Pharmaceutical, biotech, pharma, medtech, whatever. Garbage. Garbage. I don't even care on the daily. That's so nasty. Like reverse split. It's everything that a dumpster fire is made of right there. Signet Jewelers. Look at that. Probably going to 114, possibly 122 on the pop. Calm. Yeah, nice. Potential to go up higher. Dun, dun, dun. Pull this on over. Down to here. Pull this up here. Looks like 71, possibly 79. Broke above the 618. 71. About 70% likely. Time frame, probably out to July, maybe. VVPR. Viva Power. Vivo Power. Nasty chart. And a little reverse split hiding in there. I wouldn't touch this. ADX in. There, another. On these days where we don't have much moving, you see the garbage that pops up to the top here. Therapeutics, UPS, churning under the roadmap line. This is in the gray zone. Like this whole zone in here. Just the gray zone. Till we can clear this crap up. No high probability anything. We get below this, high probability going down. We get above this, high, potential high probability to go up here to 179. Anything in between, it can just stay in between for indefinitely. I mean, we can stay in this zone for the rest of this year. We can stay in here for a year. Just ping pong around in this zone. All right. I don't like to get involved in crap like that where I'm just sitting there going, please move. HSDT, unless there's a potential large upside, HSD, just garbage. SMCI, working on finishing up that head and shoulders. Be careful. We wrap that puppy up. Watch out for the big down. It's really working on that head and shoulders. Coming down near the neckline. Lows. Looks like it wants to retrace to the roadmap line. Bigger picture, 70% likely to go tag that 287. But that doesn't mean it won't retrace back here. Retest this one more time. Like this was resistance at that, see that downtrend of highs? Resistance, pulled back, broke through. A lot of times we'll see it retrace back, test the breakout before we go. Just see it a lot. Tesla, maybe. We're going to tag that 158. Maybe. A lot of disappointment on how many vehicles they made. How many deliveries they had in Q1. But I think it's an overreaction. Rongemer keeps saying that he expects we're going to find the bottom here around earnings and then go on a nice big pop. We'll see what happens. We could drift on down into earnings. They already announced earnings on X/Twitter, whatever you want to call it. They're going to be live streaming on X. Saw that announcement this morning. Intel, back of the roadmap line. If we can get above this 47 area, heading up to 54. We start breaking down lower, probably going to go test this zone between 30 and 35. TSM. Dun, 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 dun. Well, if they just keep making Cybertrucks, we'd be all right. Get those pumped out. Quit messing with all those cars. TSM, probably gonna retrace. Baidu, sideways. This is one, like, I don't like sitting. This has a very large upside potential. I don't like sitting in these. I'm sitting in this one. Just watching it churn. It can just churn indefinitely. This one's been churning indefinitely. That's why I say this. Anyway. There you go. There you go. That's the list for today. Not much. Like I said, not much was moving in the pre-market. Bias for the day? Cautious. That would be my, extremely cautious. And I'm slightly bullish after that move and the consolidation we did yesterday. And you can see it better on the ES chart than you can the S&P chart. We zoom this up, back in here, up, moving fibs. Jump down to 15 minutes. There we go. right there. This, as long as we hold, as soon as we break above this area right up here, these highs from yesterday, as soon as we break above those, we're probably going up. Like, the confirmation is up here, but we're probably going up as soon as we break above that high we saw after the low yesterday. Break above that, tilts the whole odds for going higher. This whole thing started on the 1 minute chart. We started building a more bullish potential off the bottom, which combines up to the 5 minute chart where we tested, we retraced, we actually broke through, retraced again, trying to break through again, and that combines it up to the 15 minute chart where we haven't really broke through yet. Haven't even tested yet. These things nest up. They start, reversals start on the 1 minute, the 5 minute, the 15, the 30, and you go up higher until we go higher. All right. Same for going lower. These things start on the 1 minute and build up till you find a resistance, and then, that's where you, so you got to watch these things. That's, people are like, how do you do multi-time frame analysis? Well, you look for a target on whichever time frame you're on. When you hit it, and you start watching, you start jumping down time frames, watching the lower time frames to see where the reversal sets up. So we can keep getting extensions. That's why I'm warning that we could get an extension down here. All right, if we start pushing below the lows of yesterday, we're going to probably go test this 52.21 area. These are ES levels, not S&P levels. They're different by $40-ish right now. $42 looks like. All right, there's your bias for the day. There's what's happening. Hope everybody has a good day. I'll be on Discord hanging out, doing what I can. I got some new stuff I'm working on, trying to get some stuff out, and 100 million other things. Gotta go finish the environmental sample with my dad. I started yesterday, so I'll be out for a little bit doing that. And that's porta potty juice, just in case anybody want to know what kind of environmental sample we're taking. Yeah, it's a porta potty processing facility. Have to monitor their effluent, so it's a crappy job, but somebody has to do it, I guess. All right, have a great day, everybody.